The Asia ETF from BetaShares has been on a downward spiral just recently. It's fallen about 30% from its all-time highs, going as low as $9 per share. Now in this video, we're going to look at some reasons why this is the case and some things that you should know before investing in this ETF. And since I own this ETF as part of my portfolio as well, I'll tell you guys what I'm doing too. Now quick shout out to Purple for this video idea and thank you so much for commenting. So guys, if you're new to the channel, we look at personal finance from an Australian perspective, so do subscribe if you're interested. Now, before we go into it, as usual, this video is not financial advice. I'm not a financial advisor. Please do some research on your own as well if you're looking to invest in this ETF. Let's get into it. So we're going to firstly start off this video by comparing Asia versus NDQ. Now, these two are both ETFs from BetaShares, and NDQ tracks the Nasdaq 100 index over in America, and Asia is obviously the Asian ETF that tracks the 50 top tech companies of Asia. So, these two are obviously two kind of tech heavy ETFs. So they're almost close comparables. You've got the NDQ, which is the American side of things, and you've got Asia, which is obviously the Asian side of things. So let's have a look at this. So looking at the March 2020 period, these two ETFs were pretty much neck and neck, as you guys can see. Both graphs are basically on top of each other. And then we can see that from kind of August 2020 onwards, there was a huge separation from Asia from the NDQ ETF. So we can see that the dark gray line is the Asian ETF line, and we can see that it's had an insane rise, especially through this period where it just went absolutely bonkers. And I was actually looking at this graph, somewhat earlier this year and late last year, and it was pretty surprising to see such insane growth coming out of this ETF. And at the time, I couldn't really believe what was happening, but as we can see right now, the graph for Asia has gone down below NDQ, and NDQ is outperforming Asia once again just right now. So let's look at some of the reasons why this is the case. So one of the main reasons for the downward spiral of this ETF is because China is cracking down in the Asian technology space, and they basically introduced new regulations. And part of these regulations is to ensure that large companies with large user bases are fully secured. And I believe that if the user base is more than 1 million, then those companies have to pass a special security test to make sure that that company's data is secure. And if those companies carry the data of Chinese people and Chinese officials, that data is fully secured, because if that data was to get into the wrong hands, especially the wrong country like America, obviously it could pose an insane security risk. And some other things that China is trying to do is they're obviously trying to introduce these new regulations to ensure that these large companies can't have too much market power, and essentially they're trying to combat these monopolies. And the whole aim of this is to allow more competition so new entrants can come into the market and make the market much more competitive than it is right now. And generally, as we know, with more competition comes more variety for customers, lower prices for consumers, and so on. Take the example of telco and getting a phone plan like 15-20 years ago. You would have to either sign up directly with Optus, Vodafone, or Telstra, and you had to go to these companies directly. You couldn't just choose like a third-party provider. Fast forward to 2021, you have so many new entrants in the market like Kogan, LD Mobile, Amaysim, and some other random providers as well. Now, of course, these providers are using the underlying network of Telstra, Optus, and Vodafone. However, the price point is so much cheaper, and generally, competition has resulted in cheaper prices and more variety for customers. Similarly, if you look at the example for Foxtel, 15-20 years ago, these guys were literally charging insane fees to customers monthly. I think you had to pay like $80 or $100 a month just to get that subscription to get extra shows, right? But now if you look at the landscape right now with online streaming, you've got so many providers like Netflix, Stan, Binge, which literally charge like $10-15 a month. And it really goes to show how much Foxtel was ripping off customers in the past. And with increased competition and changing consumer tastes, we can see that overall it has resulted in a better outcome for customers and cheaper costs. So that's why you can see why competition is so important. Now, late last year, China did a full antitrust review of Alibaba, as you guys might know, because it's a company that obviously operates on an insane scale globally. And because of that, the share price has fallen quite a bit. So if we have a look at the share price right here, if we kind of look at the 1 year return, it has been negative 26%, so obviously not too good. Looking at the 5-year return, it is still 100%, so it's doubled in value. But if we look at the high points of October 2020 to now, it's fallen about 40% at its highest point. So obviously it's not looking too good. There's been a massive sell-off in the company. And as of now, Alibaba has a position in Asia of about 10%. So obviously this has impacted Asia quite a bit. So you can kind of see the events that are leading to the Asia ETF falling, because this company is a large holding in that ETF. Now, a similar thing has happened to Tencent. As we can see, looking at the highs of February, it's gone down to negative 40%, which is not good at all. Looking at the 1 year return, it is negative 14%. So all that gain that we saw in the Asia ETF during that period of like 40%, it's basically back to square one, and it's actually negative from that time period. So it's not looking too good. Looking at the 5-year return, it is still quite positive though. So you can see that large companies in the Asia ETF have had a bit of a sell-off. So Tencent's holding in the Asian ETF is about 8.6%, which is quite a large holding in and of itself. So you can see why the Asian ETF has been affected so much. Now we have to understand that one of the main aims of China is to have a super strong middle class that can continually try to contribute to the economy and to be productive. And you can basically look at any developed country that is out there in the world. They have a very strong middle class and working class that can do the ordinary work. And for China, this class is growing quite quickly, and to make sure it keeps on growing, China is doing these changes to make sure that it's in the best interest of that working class and that middle class. Now you may have heard recently that China has recently cracked down on the education industry as well, that offer tutoring, often after school tutoring and some other tutoring services. And as part of this regulation, it means that these companies cannot be run for profit, and they have to be a non-profit, which means that an industry that was worth tens of billions of dollars basically got smashed very, very quickly, just like that. Now some people are saying that the reason for this to happen is to make sure that middle class and working class families don't have the unnecessary pressure of putting their kids through these tutoring services and putting them under so much stress to make their kids perform. Because if the kids are stressed, then the families are stressed, and if the families are stressed, then the middle class and the working class cannot perform to their best abilities, and that is a very big threat to China. Therefore, China has tried to disrupt the education and tutoring industry. And not to mention that these tutoring companies charge a bit of money as well, which puts a cost pressure on households. So hopefully because of this crackdown, this can relieve some of the pressure on those households. Now personally, I can fully understand this because I was born in Pakistan and I studied there for about 8 years, the first kind of 8-9 years of my life. I went to kindergarten there and school there as well, and I know firsthand that there is so much pressure over there to succeed, get a good education, good job, university, all that, shebang, the kind of the scripted pathway. And it is the belief of a lot of the people there that education is the way out of poverty, and parents really put an extreme pressure on students to perform to make sure that their kids can have a life better than their parents did. Now, even though this is like 10 years ago, I still remember the homework that I used to get from all those teachers for all those different subjects, and the burden that I would have to complete this stuff every single day, and it would take up hours out of my school time. And I can fully relate to kind of these Asian kids and what they're going through, right? Because not only do they have to complete the homework, but then they have after school tutoring, evening tutoring, and all this stuff as well, which really cuts into their time, and they don't have time to just be kids. Now I know that a lot of Indians and Pakistanis and Nepalese people follow me as well, and I know that you guys can fully relate to this as well. Please let me know if you can. So it is a lot of pressure that kids go through, and this seems to be the general trend for the overall Asian population, including China and some other countries as well, because the parents believe that education is the only way out for those kids so they can have a better life than their parents did. And I think that's fully fair in a country where you have hundreds of millions of people and not enough jobs. Often it just boils down to the education that children get. So how this relates to the Chinese context is because these changes are in the essence of making middle class lives better, and that's why these regulations are happening, to ensure that the middle class is served well, and that's why the tech changes and the education changes are happening. Now another thing with China is that they can do as they wish, quite literally, right? So they've done some horrible things in the past, and even now they're doing some pretty horrible things to people, and they'll continue to do them, but no country can really put a stop to that, right? They're the second biggest country in the world in terms of GDP, and you can't just turn around and put sanctions on a country like that, because let's face it, every single country in the world wants to trade with China. Basically everything is made over there, and you can't just stop that country. And part of doing what they want, they can basically impose new rules and regulations and crackdowns just like that. They simply don't play by the Western rules. And what I mean by that is the whole lengthy process in the West, where you have consultations, back and forth arguments, court cases, deliberations, doing a lengthy process with drafting up laws. China basically says, we don't want any of that, we're just going to enforce things as we see. And because of these very quick decisions, the Asia ETF has been falling in value, because obviously investors don't like the uncertainty. So where to from here? Now guys, look, I don't really have a crystal ball. I can't really predict what's happening. And to be honest, I don't really know what's happening or what's going to happen in the future. Maybe this is the end of it. Maybe there's going to be more in the future. Who knows? But one thing is for sure though, there is always going to be an inherent risk with the Chinese government, always. Now what I mean by that is there's always going to be a risk of something happening just like that, and as an investor, that's just something that you have to accept if you want to invest in a region like this. It is quite high risk and possibly even higher return if you compare it just to the US. Personally for me, I still hold Asia and I'm not going to sell anytime soon. With all my investments, almost all my investments, I like to take a long-term view. Now there's a few estimates out there that predict that China is going to beat the US in terms of GDP by 2028, and I think it's pretty true. I believe it. I think it's going to happen at some point for sure. So I think that it's still worth keeping my investments there for the future. And also I want to point out that China is literally on a path to world domination. The US has been at the top for far too long. Now I know it sounds pretty dramatic, but you guys get what I mean. They're on the path to being the #1 economy in the world. They've been growing at about 9% per year on average annually for the last 40 years. If you look at the compounded return of that in terms of their GDP, that's a pretty insane return. They basically had a GDP of about 400 billion in like 1980 or something, and now it's several trillion, so it's pretty insane how far they've come. I think the GDP is about 14 trillion at the moment, which is insane. And I think if you have a look at the long-term view of what's happened, I believe it's just a minor hiccup in the overall plan of China, so I don't think it's going to matter too much, but once again, it's just my view. I'm just a random person on the internet. I think China is still going to try and compete on a global scale, especially with the US in the future, but once again, that's just my view. But let me know what you guys are doing when it comes to Asia. Have you sold all your holdings during this volatile period? Are you buying more? Are you double downing on the growth of Asia in the future? Let me know down in the comments because I would be curious to know what you think. Now, if you want to look at some other ETFs out there that track the Asian market that are less concentrated towards China, check out this video right here. This video is the top 4 Asian ETFs for Australians. Check this video out, and guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. Now, if you want to look at